All right, let's talk about what's on everyone's mind in the Plasm community. For weeks, right, all eyes have been on this one date on the calendar, day 78. There's been a ton of talk, a mix of excitement and, a little bit of anxiety. But today on day 71, we just got our first real piece of hard data about what we might be able to expect. And honestly, it could change the entire conversation.
So yeah, the countdown is on. We are just 1 week away from what is, without a doubt, the single biggest unlock event the Plasm protocol has ever seen. This is the moment that's really going to test the conviction of its long-term holders.
And this is the number that's been causing all the discussion. We're talking about almost 2.3 million Plasm tokens.
And the really key phrase here is at once. This isn't some slow drip, It's a cliff. A single, massive wave of tokens all becoming liquid at the exact same time, and that's why it's been such a huge focus for everyone.
But here is where it gets really interesting. We don't have to just guess or speculate anymore. We now have an actual, real-world precedent to look at. A smaller, but still pretty significant, event just happened. And the data from it is, well, it's incredibly revealing. So let's dig in. What is it telling us?
Okay, so let's break this down. Think of today, day 71, as a preview of the main event. A smaller group of long-term holders saw their tokens unlock, and what they chose to do gives us a powerful clue about how the much larger group might behave next week.
And boom, here it is. This chart basically tells the whole story. Look at that breakdown. Of all the tokens that unlocked today, a staggering 77% were immediately put right back to work. They were restaked. Only about 23% actually hit the open market. The overwhelming choice was to double down on the protocol.
Now let's look at the ripple effect this had. So, you had about 94,000 Plasm unlocked, and 73,000 of those went straight back into staking. Just that one action pushed the entire protocol staking percentage from 60% up to 66%. And get this, it increased the total shares by a massive 33%. These holders didn't just hold the line, they actively made the whole protocol stronger.
So, okay, that's what happened. But what about why it happened? I mean, why would so many people choose to restake instead of just cashing in? Well, the answer is baked right into the protocol's core design. It's one of its most powerful mechanics.
It's called the T-squared advantage. The easiest way to think about it is like a loyalty program on steroids. The longer you keep your tokens staked, the more share power you build up. And that power determines how big your slice of the rewards pie is. And it's not a straight line. It grows exponentially. This gives the OGs a massive compounding edge.
Let's actually put some numbers on that to see how big it is. A day 78 holder, they've stacked up over 6,000 time units of advantage. Now compare that to someone who just staked 30 days ago. They've only got 900. What that means is the early holder has almost 7 times more share generating power for every single token they stake. It's a huge multiplier.
And that brings us to the big economic question that every single one of these unlocking holders has to ask themselves. When you've got a compounding advantage that powerful, a nearly 7x multiplier on your earning potential, does it really make sense to sell that advantage for whatever the price is today, or is holding on to that advantage way more valuable in the long run?
So with all that in mind, we can now take what we saw on day 71 and start applying it to the big one on day 78. We can finally move away from just fear and speculation and toward a model that's actually based on observed behavior.
Pay close attention here because this slide is probably the most important one in this whole explainer. On the left, that's the fear narrative, right? All 2.3 million tokens get dumped. But on the right, that's a model based on what we actually saw people do today. And look at the difference. The potential sell pressure absolutely plummets from 2.3 million tokens down to just over 500,000. It's a completely different scenario.
And just to be totally clear, that new lower number is based on a really simple and transparent assumption, that the day 78 group will act a lot like the day 71 group and restake at about a 77% rate. It is an extrapolation for sure, but it's one based on what real people did with their real tokens.
Now, we absolutely have to add a major caveat here. This is not a guarantee. The day 78 holders, they're a different breed. They're the earliest of the early adopters, they've waited the longest, they hold the absolute maximum T-squared advantage, and boy have they been through the most volatility. Their conviction could actually be even higher, or maybe it's lower. It's just a different group of people.
But there are other signals that really support the case for resilience. Let's look at some of the underlying metrics that show the fundamental health of the protocol, completely separate from any single unlock event.
I'm going to start with the protocol's fundamental strength, and it starts with the number 10.
What is that? That's 10 straight days that the protocol's yield engine has grown, and this wasn't during some calm, quiet market. This streak happened through a 50% crash, a 100% bounce, and a bunch of unlocks. Through all that chaos, the engine just kept chugging along.
And at the same time, the price has been steadily pulling away from its floor. I mean, just look at this. 3 days ago, the price was 70% above the floor. Then yesterday, 128%. And today, it's sitting at 209% above the floor. This growing cushion gives the protocol a lot more room to absorb whatever pressure comes its way.
So, with all that said, what's the next week actually look like? Let's map out the schedule leading right up to the main event.
Okay, so we've got a couple of moderate unlocks coming up, but the one you really want to circle on your calendar is day 76. Over 174,000 Plasm are unlocking then. It's the first real six-figure release. Think of it like the final dress rehearsal, our first true cliff test before the big show on day 78.
And here's one last piece of perspective for you. The dollar value of that potential sell pressure on day 78, it has fallen off a cliff. At its absolute peak, that 2.3 million Plasm was worth over $2.1 million. Today, it's closer to $782,000. That's a 64% reduction. The market itself has already de-risked this event quite a bit.
So if there's one thing to take away, it's this. The fear-based narrative pretty much assumes a worst-case scenario where everybody just sprints for the exit. But the data we actually saw today, it paints a totally different picture. It suggests a lot of holders really understand the incredible power of their T-squared advantage, and they're going to choose to compound it, not sell it.
Look, today we saw conviction win out. The next 7 days are going to show us if that pattern holds. And as always, please remember this is just for educational purposes. It is not financial advice. You've always got to do your own research.